Yo, what is up, traders? So in this video, I'm going to show you exactly how to find high quality swing trade setups, whether it be the Forex market or the futures market. It doesn't matter. It works in any markets, and you can take these concepts and apply them today in your own trading. I've done 8% over the last month on my swing trade accounts, just risking 1.5% per trade. So let's get into it. Today we're going to look at GBP USD on the 4-hour chart, and this is a trade setup that I had posted in my Discord that played out beautifully, and I will show you exactly why. So the first thing I want to mention is that I personally think it's important to understand some economics when you're swing trading, so you know if an asset is fundamentally bullish or bearish. The way I personally do that is I use software called the EdgeFinder here. And what it is it's developed by traders, and they give it a bullish to a bearish score depending on all the most recent economic reports. And they have this scoring history too. If we look at GBP USD, we can see that, 30 days ago it started relatively bullish, and it's been losing economic strength, going more and more bearish as the weeks gone on. So I kind of build a case for myself like that and really understand that, okay, well, economically this thing is bearish, therefore I want to be going short, so I'm on the right side of the economics for this trade. It's not 100% necessary, but it definitely does help. So if you want to check that out, I will leave a link for that software in the description of the video. Okay, so when we're looking at the 4-hour chart here, there's something very important to understand. Because economically I'm bearish on this asset, I'm looking to go short, right? And we can see on the 4-hour chart, over the span of 2 weeks, we had some really strong sell-off. This is a 2-week window here, right? And then we had some consolidation, right? We hit some support down here. We can see right here, we hit some support. Then we had some consolidation, and then we had a break of that consolidation to the upside. And this is what I would call a pullback or manipulation. Both are the same, okay? The very first thing I do when I'm looking at a sell-off like this and I want to go short is I take the Fibonacci tool and I just draw this Fibonacci retracement from the high to the low of the previous strong move, okay? Now we can start to see different retracement levels here that might be interesting to us. And I want to see if any of these retracement levels kind of align with some nice price action reversal zone. So if I zoom out here, we can see that the very first thing I'm looking at is this 50 level. I really like the 50 level Fibonacci retracement zone. That is one of my favorites when I'm swing trading any asset. Okay, so we have the 50 level right here, and as we can see that historically we had sellers come in at that price point multiple times, pivoting the price right here and right here. So it is a relevant price point. Now, when I'm setting up my trade, I want to show you something in the Discord, okay? So I post these swing trade setups in my Discord all the time. You can go in for free, check them out for yourself. I'll leave the Discord link in the description here. I highly recommend you come in there, say hi to me. But this was the trade setup that I posted in the Discord. And as you can see, a price had sold off, the retracement level, this was my dream level. And that's what I do when I'm setting up a swing trade. I try to find a dream level that I would be interested in entering the market at. I don't look at the market in real time like this and say, oh, that looks like it could go down. I'm just going to enter. I'm just going to sell right now. That's the last thing I'm going to do. I'm going to build a case in my head, and I'm going to say, you know what? If price comes to my dream level, then I will enter the market. Okay, so I'm going to be stubborn with my entry. I'm going to come up with the most optimal entry that I could ever wish for, and only enter the market if the price hits that level, period. No ifs, ands, or buts. I'm very stubborn about that, and it is so important, okay? So when I was looking at this trade, right, this is my dream level, the 50 Fibonacci level. Maybe it'll just start selling off and I miss the trade. That's okay. There's always going to be new trading opportunities in the market, and you really have to get over this FOMO if you're going to be a successful swing trader or day trader long term. The FOMO cannot exist, okay? So when I'm setting up this trade, I say, okay, well, I have this level that I'm willing to enter the market. Now, how do I set up the trade itself, the risk for the trade? Well, the very first thing I do is I just pull up this tool here, and we're planning to go short, right? And I say, okay, well, if price comes to that level, then I possibly want to target these previous lows where we had support and we had buyer step in, okay? And that's 200 pips, all right? Because these are 4-hour candles. So that is a relevant move on GBP USD. Now, in my opinion, the stop loss is vastly more important than the TP. The stop loss is what keeps you alive in the trade for you to collect that profit, okay? So when I'm setting up a stop loss, there's a few things that I consider. The very first thing is an indicator that I use called the ATR, okay? That's the average true range indicator. I pull that up, and what I like to do for a swing trade is I like to use somewhere between the 4-hour and the daily level. So what this is, this red line, it's very simple. It's just the last 14 candles, the average price movement of the last 14 candles. So if I hover that, I can see that's 32 pips. If I go to the daily, the daily is 90 pips. So between 30 pips and 90 pips, around 60 pips, between those two is what I generally aim to go for. That's a beautiful range for a swing trade. Okay. So I just don't take that range and blindly place a 60 pip stop loss. What I'll do is I'll look at the market structure and I want to identify what is the next major key level on this asset. And the reason I do that is because I want to use that as a defense for my stop loss. I want my stop loss to be on the other side of that key level. So if I'm looking at this thing, then I'm seeing that the 618 Fibonacci level is the next major key level, right? As we can see here, we had sellers step in there previously and completely just pivot the price again, okay? So that's going to be my next key level. I don't like this as much as an entry, right? Because I know that fundamentally, economically, GBP USD should be selling off. It's going through a temporary pullback, right? But I can use this as a defense for my stop loss. So I'm going to place my stop loss, somewhere around that 60 pip range, like that. And now my stop loss is just on the other side of that 618 Fibonacci level. A beautiful defense in case, the trade doesn't go perfectly the way I want it to. We still have this big buffer before it kicks me out of the trade, right? And on this trade, generally, I'm going to risk around 1.5%. How much you risk is entirely up to you, but I feel like a 1.5 for a swing trade is very reasonable on your account, okay? You shouldn't be going 10% or anything like that because, if you go on like a 2-3 trade losing streak, you're going to be cooked, okay? So now that we have everything set up, we can I'll show you in the Discord how it played out here. I posted an update. We got in, it hit our entry price, got in, and just a beautiful sniper pivot reversal right there as we expected. And as you can see here, another update, almost hitting the TP. This was on a Friday. I said I was going to hold it over the weekend. And then the Monday opened, boom, we smashed the profit there for a beautiful one. I think the trade lasted for about a week or so, right? And if I press play here, we can see that it comes up and it comes down, smashes the TP. Now, I exited here because of the support level. If you want to, you can trail the price by 1R, right? If you want to try to catch a bigger move, if this thing just keeps dumping and dumping and dumping, you take a look at your stop loss level, let's say around 60 pips. So every time you go 60 pips in the profit, you move your stop loss to break even. If you're 120 pips in the profit, you move your stop loss to 60 pips in the profit, and so on and so forth. You get the point. Now, in hindsight, we can see we completely smashed through the support and we just kept dumping. My bias was so completely right? We could have gotten double the profit on this trade, but just because there was so much news this week, there's a lot of different factors I consider, but there was a lot of news this week. I wanted to get out of the trade. Sometimes it's better just to take the guaranteed profit than to risk a volatile market conditions and just losing half your profit because of unpredictable economic news, okay? So that's exactly how I set up my swing trades. So just a quick recap. Look for a move, right? Look for a move. Take that Fibonacci, run it from the high to the low, right? Run it from the high to the low and take a look at those Fibonacci levels align with any previous market structure that might build your case that it's a high quality price point where the price could pivot suddenly, okay? And that's exactly what we're looking for here. Try to understand what side of the economics you're on. It's very important. It will really give you an edge long term if you're confident enough that you know the economics are in your favor with whatever direction you're going in on the trade. And I always like to trade pullbacks, okay? I don't like to chase price action. I like to wait for the price to come to my desired dream level before I enter the market, all right? And if you found this video useful, guys, please give me a follow, check out my socials, all that stuff. I'm always posting really valuable trading content for you guys to become better traders as well. So I appreciate the time, and I will see you in the next one. Peace.